Thanks for joining us at xm.com. You're watching this Forex Preview video. I'm Christina Marujas. Joining me today is Marios Hadjikyriacos, investment analyst. We'll be looking at Eurozone PMIs and, of course, the outlook for the euro. Now, Marios, we're looking at a very important Thursday because in the morning we'll be getting preliminary PMIs for April. But you seem to think that the meeting of the EU leaders in the afternoon are what is going to drive the euro. Now, why is that, and how do you see it playing out?
Well, hello, Christina. Well, here's the thing. Economic data don't really mean that much in this environment. Everyone knows we're in a recession already. So the real question is, when do we get out of it? When do we recover? Now, economic data are backward looking, so they don't really tell you that much about the future. Now, the PMIs are an exception to what I just said. They have a forward-looking component, so investors might pay some attention to them. However, it's not economic data that will drive the euro. Instead, I think that the currency will look to the meeting between EU leaders. Now, they will be discussing more stimulus measures, including some form of a risk-sharing mechanism like Eurobonds, which, in my opinion, is the most important variable for the euro. Now, I don't think they will agree to anything resembling Eurobonds. Germany and the Netherlands are very opposed to the entire notion, so the probability of a breakthrough of a deal looks very low. Now, what does that mean? I think that implies that the risks surrounding the euro from this meeting are asymmetric. Nobody's really expecting a deal on Eurobonds. So if they surprise us and deliver a deal, that could trigger a very sharp upside reaction in the euro. However, if they don't agree to anything, as is quite likely, that's what everyone expects already. So the euro could drop, but only slightly.
Now, if we're looking at the big picture, though, it's quite difficult to be optimistic regarding the euro. Do you think Thursday's events may trigger a longer-term rebound?
Well, only if they agree to Eurobonds, which I think is a very, very low probability scenario. Now, overall, I'm not an optimist on the euro. The institutional structure of the Eurozone is really a mess. Now, every time there's a crisis, there's a lot of uncertainty about, will there be stimulus? When is it going to come? Are they going to agree? And there's a lot of drama and so on. So my example with this is, imagine in the US, if every time there was a crisis, New York had to negotiate with Texas and every other US state about what kind of stimulus they will do. It's a mess. It creates a lot of uncertainty, and that, in my opinion, puts a risk premium on the euro. Now, in the shorter term, I think that euro dollar specifically will be driven by risk sentiment. So the pair has really been trading in the same direction as stocks, basically, and that has a lot to do with the dollar, which has been acting like a safe haven in this crisis. Now, I think that there's a high likelihood that we see another drop in stocks. I think that the stock market has come too far, too fast, and there's a lot of optimism priced in, and I think that's unfounded because unemployment is rising very quickly. I think that this recovery will be much slower than markets assume, and therefore I believe that we might see another drop in stocks before very long. And if that happens, that could also drag euro dollar lower.
Marios, thank you for joining me today, and thank you for watching this Forex Preview video here at xm.com.